Hello, everyone, and a very warm welcome to this Friday's Major Markets Update for Friday the 13th, 2023. Oh, scary. And today was a bit of a scary day in the market. We opened higher and then plunged lower. It still looks like a decent ABC lower from yesterday's high, but we might be subdividing. Now, the 4 equals 5 is my limited attempt to say after wave 4 comes wave 5. Otherwise, you probably think this is some sort of woke math, where these days 4 can indeed be 5, because apparently in some alternate opinion, that is absolutely correct, because math is, of course, racist. That on the side, as I think with that, we're all doomed. Bigger pictures, you know the bigger pictures. And let's have a look here. Seasonality, you know the seasonality. This will be in the slides that I will be sharing with you. We're entering a bit of a period of chop if seasonality still holds. So the last 2 days shouldn't be too much of a surprise. Also here on both, bit of a chop version before we should see an end of year rally starting somewhere mid this month, later this month. Stop losses, always have stops in place, minimize your losses and maximize your gains, but preferably and only minimize your losses. That's the only way to success. Please use me to your advantage. So many people never ever contact me and then say afterwards that didn't work. Well, that's on you. Contact me and I can help you out making it work. That's the whole point. It's not easy. Financial markets are one of the most difficult things you can get yourself involved with. This is more difficult than being a heart or a brain surgeon. Why? Because there is no university, no course, no education, nothing. All these years you've gone through school and nobody's taught you anything. Absolutely two things, jack and shit, about the financial markets. Nothing. We have total illiteracy when it comes to the stock markets when we first get into it. Everything else, we have some sort of education. Math, physics, languages, arts, all those things. Not in the financial markets. That's why it is one of the most difficult things to deal with, because you have to be autodidact, learn it yourself, or get somebody to help you with it. If you don't find help, it won't solve the problem. It's really, really true. A brain surgeon, you can go to a university, you'll take 6-8 years, do an internship, another 4 years. After 12 years, you're a brain surgeon. Okay? Not everybody's made for it. I would be a good brain surgeon, but at least you can educate yourself. Financial markets, zero education when you get into it. So make sure you educate. If you don't educate yourself, that's on you. I'm not there to do that. You still need to educate yourself. This especially goes to those that are listening here on YouTube. If you think it's easy, forget about it. Nothing is easy about the markets, not on any time frame, not on any scale. That said, rant over. Let's have a look here at the charts. We were expecting a wave 1 high, I believe somewhere in the low 15,000s we originally set since the early October low, and that still looks reasonably well in place, I must admit. Also for the S&P 500. And of course, for as long as the October and September lows hold, those are the lines in the sand, we should still expect our rally. Okay, so of course we go below here, whatever the number is, 14,430, then our entire assessment is wrong. Remember, we are always wrong to prove it right by the markets. Now, you can clearly see we have this wave 1 here, which is equivalent here on the S&P 500 there. So you can see the NASDAQ is already trading here. I cannot make this a 4th wave. Okay, some people say the S&P 500, this is still a 4th wave. Let's see if I can find. I don't even think I have it on the chart anymore for the S&P 500. No, I don't actually. So why is that they're not a 4th wave? Because 4th waves and 1st waves do not overlap in a standard. This has gone way too high. The only thing is that this is an A, this is another B, and this is another C. We're going to subdivide lower, but it does count reasonably well as a impulse up. Okay, 1, 2, 1, 2, 3, 4, 3, 4, 5, and the decline has started. We've been looking for a wave 2 decline to this target zone of about 14,800 plus minus 100. Today we got to as low as 14,943, so we're getting pretty close. However, on the hourly time frame, the Nasdaq 100 counts like an impulse lower. 1, 2, 3, 4, 5. So yesterday's decline was wave 1. The bounce into the close and today's open was wave 2, 3, and then no overlap with 4 and 1, except of course in the labeling, but not in price. And then we got our little step lower. Should be in a bounce to about 15,200 plus minus 50, ideally. Right? This is of course now stiff resistance, 15,250. That is of course, as you clearly can see, resistance 15,250 is resistance. And if we break above it, then we go to the alternate wave count. We break below, I would say 14,950. Okay, so 950, 965. Those are the important levels in the market, as you can see here, right? Right there, as you can see there, and look where we are today, right? So let's make it a nice 14,950. If we go below that, I think we can target here. So the ideal path is now for this wave A to have completed, maybe a little bit more downside, it's fine if we subdivide a little bit lower. Then we get this wave B going, and after B comes C, right? There you go, C. Into the ideal target zone again, 14,800 plus minus 100. So far so good. Our prognostication from earlier this week has been pretty spot on. Some people have been asking me a lot, when is the second wave going to come? Is it off the table already? No, it's not. It hasn't been off the table. It's just some ways that we can interpret the price action. For example, here as well, that we are in a fourth wave of wave 1. Please note that we did reach the 176.4% extension for this. So we could, for example, have done 1, 2, 1, 2, 3, 4, 3. And this is then 4, okay, 3, 4, 5. So also this wave count would allow us, then I would place this here. So how you exactly interpret this, okay? So we top there, we have this extended wave 5 there. So this is then wave 5. And there's nothing wrong with this wave count. 3. And then this was 4. And then this is 5 to the 176.4% extension. Okay, that is wave 1. Fine with me as well. Counts both, absolutely correct. A, B, C for wave 4. And this is wave 5. So this is also a first wave. So since the September low versus the October low, we can both count it as 5 waves up. Okay, just so you know. Alternatively, save the changes. Alternatively, we're going to get an A, a B, and a C, right? And then another rally, and then we get our wave 2, which would match, as I showed you, with seasonality, maybe a little bit better for a drop later in the month, but not necessarily. And we, in this case, don't want to see overlap with 14,900. So below 14,900, this alternative is, of course, off the map. But this one does expect the same path. We should bounce pretty soon, and then another leg low, okay? Because of the 5 waves lower. This wave C does not have to equal the length of wave A. I have seen many C waves that are shorter than A waves. If we go, of course, above this level here, I think it's about 15,325, then we'll see this wave 5. Okay, but for now, I expect a bounce and another drop. And that drop cannot, of course, for this option, go below 14,900. If it goes below 14,900, then we can take this option off the table, which is an alternative already anyway. This is the preferred wave count, okay? This has been the preferred wave count for the last week plus or so. But we always have an alternative available as an insurance policy in case price does break below or above a certain price level. But for now, as you can see, the preferred wave count is looking for a B and a C. The alternative is looking also for a B and a C. So we go with that. Then it just depends on how low the C wave is going to go. That's all. So this is still very useful for your trading. If one cannot figure this out, then there's something wrong with you, not with me. So here is then our wave count for the wave 2 low. And yesterday we reached a 4325 after we broke below 4345. That was the easiest 20-point trade you can ever make. You go boom, ding, dong, nailed it. 1, 2, 3, 4, 5 up. In my humble opinion, wave 3 topped where it had to, wave 4 topped where it had to, and wave 5 extended. Fine, that's fine. Looks very nice as 5 waves up. And this then looks like a sloppy ABC with a ending diagonal wave C of 2. We are already in the ideal target zone. So for the wave C in gray, so nothing out of the ordinary at all. This could allow for a little bit lower, for 5 waves lower. Alternatively, we already completed the diagonal, okay? And let's see what I get here. So that one's off the table, and that one is also off the table. So here we could still see also alternative that we have bottomed for this wave 4. As you can see right here, where I placed the label for a wave 4, okay? And then another wave 5 to go. And of course, we need to break above 4385, okay? 4385. If we go above 4385, we can target that level. That's what I'm going to look for. And then last but not least, allow me to introduce then, of course, the alternative. That is that one. So then we have, of course, our low in place. Okay, so then we simply go quickly updating our wave count. And then this is 3, and then this is 4, and then this is 5 right there. And this is 1. Take these away. You can see how this works. Okay. Works really well too. So this is then wave 1. This is then wave 2. Okay. And then this is completion of the wave 1 top here, as I mentioned. Take those away. We take all these excessive labels away. We got pretty close. We bottomed here with a failed fifth of a C wave. Fine with me. Don't really like it too much. That's okay. That's why I rather count it as a 1-2 setup. And then, of course, we are completing here wave A, right? We get a bounce here for wave B, which would match also with seasonality a bit, as we should be a bit range bound. And then we get our final wave C. Okay, somewhere like along these lines. So we could still go a little bit lower for the wave A to complete that diagonal, as I showed you in the other chart, like that. Okay, so we have some sort of diagonal forming, which is absolutely fine with me. It's a matter of how you exactly interpret this price action. It's always a little bit less clear with this overlap. It does look overlapping to me, right? Down, up, down, up, down. It is quite overlapping. Still looks corrective. So then we get our wave there, and where should we expect then wave 2 to bottom? Somehow stock charts always uses that useless spiral. It's the dumbest tool I've ever seen in life. Sorry, it's just sort of I don't like it there. And then we of course get our wave C somewhere there. Okay. So we'll get probably a bounce back here, something like this. And then let's do a nice CSA relationship, something like this. That will get us there, right there. Not too bad, not too shabby. Okay. CSA. So this path, of course, is then similar to what we're seeing for the NASDAQ 100. Okay. And as you can see here, we start to see some positive divergence but it's only a condition, not a trigger. Let's hope this all gets saved. Yes, there we go. Which is similar. Here we expect a bounce and then lower. And of course, here we instantly expect higher, which matches, of course, with the bounce. Okay. And here we also expect, well, slightly lower. And then, of course, wave 3 kicks in. So it still looks like, well, all right, we'll get some more upside pretty soon versus sustained downside. And of course, the raw line in the sand remains right there. Below 4220, and all bets are off. That remains our line in the sand. Okay. And of course, if we go above 4385, then I think we have the wave 3 already going. So as you can see here, this one would allow for a little bit lower, and then of course take off for the wave 3, right? And the alternatives do the same. The alternatives allow for, we could go a little bit lower here as well for this wave 4 and then a wave 5. Okay, so this is then the alternative. Then we get 2, right? Then the wave 2 there is postponed a little bit. So also here we should look for a little bit higher, as long as we of course hold today's lows. We break above 4385, we can target 4430, right? And the same here, bounce. Also here we can allow for a little bit lower, bounce, and then lower. So all pretty much are pointing in general in the same path. Even this one will of course have us a 1-2 setup, right? Something a little bit more detailed would then be of course a 1, something like that. And then of course we get 2 in more detail, and then a 3. So you can see overall path is still reasonably the same for all options, and we just tracked it there, right? Not too immensely different. So I like it, and now we simply let the market decide how it's going to fill itself in. Again, a little bit lower would not surprise me for a 1/5 of a C of a second wave. Alternatively, it is a 1/5 of a C of a 4th wave, and then we bounce, and then we drop, and then we rally. Or here, also here, a little bit lower, bounce, drop, and then rally. So the general path is quite the same. Now here is a index that is on watch. This is one of the preferred wave counts that we were looking for this continued B wave. But please remember, the small caps are in an entirely different universe than the mega cap NASDAQ 100 and the large cap S&P 500. This is small caps, and small caps are economically much more sensitive. Apple can buy all of Europe if it wants to, pretty much with full cash that it has available. Of course, your mom and pop stores can't do. And this is market signals that the small cap stocks are not doing great at all. The small cap industry, the small cap economy is not doing great at all. Most likely due to high interest rates, they're much more sensitive to that. Can't pay the bills and all that stuff. So this is under fire. Okay, if we see a break below this low here, and I shared this already with you yesterday, and I've shared this continuously, only above 181, this option will be off the table. Then we have our wave 4 top and a 5-1 relationship targets into the low 160s. If we go below this one, I think we really have to seriously consider that the B wave has already topped, and all we're going to get is a second wave bounce, maybe back to 180, and that's it. All right, this index really shows you after yesterday how treacherous this can be, that on a short-term basis always have stops in place. This market hasn't gone anywhere over almost a year and a half now. It's not a healthy bull market, but I've hammered that home so many times. It is not necessary to repeat it. Last but not least, this is the semiconductors. Let's go to the first chart here. Semiconductors, this was the wave count we were tracking, 1, 2, and then a 1, 2, 1, 2, 3, 4, 3. And ideally, we should have bottomed somewhere around 3,500 to rally for 3, 4, and 5. Well, that has not happened. Now, we also are looking here for a impulse lower. So what we also do see here is this overlap, 1, 2, right? 3, 4, 5. So we did get 5 waves lower from this B wave high. So this cannot be a 4th wave anymore. As some are searching for in the S&P 500, saying the current rally is still part of a 4th wave. It cannot be for the NASDAQ 100. It cannot be for the semiconductors. Just to show you that the S&P 500 should yesterday have traded somewhere around, oh boy, that is then early September levels, somewhere right there into 4400s already. So you can see it's quite a discrepancy. I just wanted to point you out. So this makes things more complicated. So now we have a problem with overlap with this wave 1, which looked quite nice as an impulse. And this was the leading diagonal. Everything went well. And we now have to consider that, for example, semiconductors are doing a more drawn out A, B, C path. Okay. I have the A and B in blue. And remember, we anticipate, we monitor, and we adjust. So we topped picture perfectly here for the wave 3, which goes right there where it should. Now we have overlap with this wave 1, as you can see right there. So this looks better as a simple ABC, higher. So bigger picture-wise, the semiconductors might need to drop for this C wave of a more complex double zigzag wave 4. Okay, this also happened, for example, in the gold and gold miners complex. And for those of you who are not tracking that, please remember gold and GDX, for example, are up very nicely. GLD is up 3%, GDX is up 4% for today. So those ones I think are soon confirmed bull market. So we're adjusting this, and it might now be that we have an A, a B, and a C wave, with the C wave still expected lower. Okay, so again, this is very overlapping price action. I cannot make this into a 4th wave as part of this decline. That this is 1, 2, 3, 4 makes no sense whatsoever. So this is something else. So please be patient in us trying to figure out exactly what is going on here. But now this path has opened up. Definitely not preferred. I definitely did not foresee it. But I now have to acknowledge that this is possible because we overlapped with 3480. We shouldn't have. We should have stayed nicely above 3480. Okay. So not ideal, suboptimal at best. How we're doing on market breadth? Still too high, the new lows. New lows are still triple digits, still too high. That is not a good sign, but there's always something to say against the market. Please remember that the windows on Wall Street are never squeaky clean. There is always a smudge somewhere, but this is still too high. Okay, still a matter of concern. What is a matter of positive data is that the McClellan oscillator is still positive. It's only 11, but again, we had a reasonably spike higher, similar to what we saw here. Still positive. So even today, more stocks were advancing than declining. Not by much, but positive is positive. As such, the summation index is almost about to go to a buy, again, from very oversold levels. So far, so good. Let's have a look how this is going to develop over time. But we already had our double positive divergence going in this low here. And also some people might count the S&P 500 as, so this being 1, 2, 3, 4. Remember? That's what I said. So they see that as a 4, but that doesn't work on the NASDAQ anymore, right? The NASDAQ is completely overlapped it. It doesn't work on the semiconductors anymore. So it is a little bit hard to say that, okay, then that's 4 for the S&P 500. I rather like this 1, 2 setup. Why? Because it's worked really well. On Monday, we said we're looking for a top, and then Tuesday and Wednesday, we kind of stayed sideways, and then Thursday and Friday, we got our decline. So far, this, I think, has worked really well, the 1, 2 scenario, and now we just simply need to go through the machinations of this second wave, and corrections are definitely more difficult to forecast than impulses because they overlap so much, and they can always become double or triple even if they want to. You just don't know beforehand if the second wave will be a flat or a zigzag, and if this flat will maybe tag on a zigzag. So you get an ABC flat and an ABC zigzag. Many possibilities. So that's always treacherous. For now, we were looking lower. Said already on Monday, it starts to look pretty toppy for this wave one, and we're looking lower. Second wave has not been off the table. So far, so good. So that's what we're going to stick with. How we're doing on the buy-sell signal indicator. So far, still on the buy. I don't have data for today. I don't expect it to turn it into a full-blown sell. Definitely stalling out a little bit, but that's okay. Still on the buy, so that's pretty good. How we're doing on money manager exposure to the markets, still very underexposed. So this is still gives us room for improvement to get overexposed, which will get us closer to a top. This one does tell us like, well, we're getting a little bit ahead of ourselves with a lot of bulls, 40% for the AAII. So that's definitely a little too much, and hence maybe the last 2 days, because this is data goes through Wednesday. A huge jump from 30% to 40%. Most came from the neutral side of things, but it definitely jumped, in my own opinion, a little too much. So we had the last 2 days to burn that off. How we're doing on the fear and greed index, it's still in the fear. Okay, so this one has still also a lot of room to improve, meaning higher prices in the markets. Okay, so that's really all we have for today. Again, the NASDAQ 100 cannot count as a 1, 2, 3, 4, 5 decline, with the wave 5 still to come because of the overlap we've had here with this potential wave 1. Okay, you can't. S&P 500 is still possible, but in my humble opinion, much less likely now that the NASDAQ 100 has produced an overlap in the NASDAQ as well and the semiconductors. We can still allow for a final fifth wave higher to complete a larger wave 1, but below 14,900 lights out. I do expect shorter term a bounce and then a drop again. Again, please remember seasonality, if that is of importance going forward. That's always to be determined. It's just an average. It's our final forecasting tool. I would say price is our, of course, ultimate forecasting tool. Price trumps everything. And as you can see here, we should now enter a quite choppy period. Okay. Also, of course, according to equity clock, we should see a little bit more of a choppy period. And then somewhere at bottom, somewhere mid to late this month, as long as this keeps tracking, of course, and then an end of year rally. You could also plunge, totally could, and that's why 4,220 remains the line in the sand for the market. Still tracking the second wave lower, which easily can become a little bit more complex, A, B, C as well. I can count 5 waves up either since the, I believe, October 6th low, as well as the October 3rd low. So this looks still pretty well for, so there we go, 1, 2, 3, 4, 5. Okay, so I remain cautiously optimistic for the markets to move higher, not until proved otherwise, because of the NASDAQ 100 and semiconductors that have completely overlapped with their 4,030 equivalent on the S&P 500. Okay, so that's all I have for today. Thank you so much for listening. Take care, trade safe. I'll catch you all on Monday. Bye.